Welcome to a new video of Municipal Finance for everyone. Today is August 6th, 2025. This is what we are going to cover in this video. The most recent composite tax-exempt AAA Muni Curve. The most recent composite tax-equivalent AAA Muni Curve. The daily change of the Muni AAA Curve. How the Muni AAA Curve has changed year to date. Terms and definitions. Let's go over the most recent composite tax-exempt Muni AAA curve. The following composite tax-exempt yield curve is based off the most recent ICE TradeWeb Bloomberg yield curves that are available on the AAA-MSRB website as of August 5th, 2025. The one-year composite tax-exempt yield is 2.29%. The two-year yield is 2.27%. The three-year yield is 2.29%. The 5-year yield is 2.44%. The 10-year yield is 3.15%. The 20-year yield is 4.11%. The 30-year yield is 4.38%. Let's now go over the most recent composite tax-equivalent Muni AAA yield curve. The following graph shows in red the tax-exempt after-tax yield curve versus in blue its tax-equivalent pre-tax version as of Tuesday, August 5, 2025, assuming a 40.8% top tax bracket. Why would you care to see the tax-equivalent version of the muni-yield curve? More on this shortly. Let's first go over the pre-tax, aka tax-equivalent yield curve. The one-year tax-exempt yield is 2.29%, corresponding to a 3.87% tax-equivalent yield for investors in the top tax bracket. The two-year tax-equivalent yield is 3.84%. The 5-year tax-equivalent yield is 4.12%. The 10-year tax-equivalent yield is 5.32%. The 20-year tax-equivalent yield is 6.95%. The 30-year tax-equivalent yield is 7.4%. Let's now go over the tax-equivalent Muni AAA yield curve versus the US Treasury Curve. The reason why investors and financial professionals care about Munis tax-equivalent yields is to simply have the ability to compare them against US Treasury yields, which are pre-tax yields. Observing the current graph, we can see there are some parts of the tax-equivalent Muni curve currently trading above the Treasury curve. For example, if you wanted to buy a 30-year bond, a AAA Muni bond would yield 7.4%, compared to a lower yield of 4.8% from a Treasury bond. Let's now go over how the Muni AAA tax-exempt curve has changed since the prior business date. The graph displayed on the top-hand side shows the most recent curve versus the prior day curve. The bar plot on the bottom-hand side shows instead the difference between the two curves, in basis points. The one-year tenor changed -2 basis points. The 2-year tenor changed -2 basis points. The 5-year tenor changed -3 basis points. The 10-year tenor changed -2 basis points. The 20-year tenor changed -4 basis points. The 30-year tenor changed -5 basis points. Let's now go over how the Muni AAA tax-exempt curve has changed year to date. The graph displayed shows on the top-hand side the most recent AAA Muni curve versus the curve at the end of last year. The bar plot on the bottom-hand side shows instead the difference between the two curves, meaning how much each tenor of the Muni curve has changed in basis points. The 1-year tenor changed -60 basis points. The 2-year tenor changed -58 basis points. The 5-year tenor changed -43 basis points. The 10-year tenor changed 10 basis points. The 20-year tenor changed 50 basis points. The 30-year tenor changed 49 basis points. Terms and definitions. What do we mean with composite? Every day, thousands of muni bonds are traded, as you can freely see on the EMA website. Different data providers like ICE, TradeWeb, Bloomberg, to name a few, provide their calculated Muni AAA yield curve. Given that it's very difficult to tell which curve is more accurate on any given date, we compute for every tenor the average off the yield curves available to us. Currently, we manually capture yield curves available on the AAA-MSRB portal. What do we mean with tax-exempt yield? Yield is one way to measure how much return you earn each year when you invest in a bond, meaning yield is usually an annualized measure. For example, if you invest $1,000 in a bond with a 5% yield and it matures in 1 year, you'll get $50 in interest plus your $1,000 back 1 year from now. But most bonds are taxable, meaning you pay your ordinary income tax on that $50. If you're in the highest tax bracket, 40.8%, your after-tax interest actually received would be $50 times 1 minus 40.8%, and that gives us $29.60. This means your true after-tax yield is 2.96%, not 5%. On the other hand, municipal bonds, aka Munis, are usually tax-exempt at the federal level. That means the full 5% yield from a muni stays in your pocket. No federal tax is taken out. This is very important to keep in mind when comparing municipal bonds that offer a tax-exempt yield versus the yield of taxable securities, like US Treasuries and corporate bonds. What do we mean with tax-equivalent yield? From the last slide, we know most, but not all, muni bonds offer tax-exempt yields. But to fairly compare a muni bond to a taxable bond like a US Treasury, we need to ask, what taxable yield X would give me the same after-tax yield as the one given by my tax-exempt muni bond? This X is what is usually called tax-equivalent yield, TEY. It shows what a taxable bond would need to yield to match the muni's tax-free return. This is how the formula looks like. Tax-equivalent yield is equal to tax-exempt yield divided by 1 minus the investor tax rate. For example, if a muni bond yields 3% and you're in the 40.8% tax bracket, the tax-equivalent yield would be 3% divided by 1 minus 40.8%, and that's equal to 5.07%. So, a taxable bond like a US Treasury would need to yield at least 5.07% to match the yield of a tax-exempt muni bond, currently yielding 3%. What do we mean with basis points? Basis points. This is a term often used by financial professionals. It's a very easy concept. Don't be scared about it. 1% equals 100 basis points. Basis points. Interest rates increased 100 basis points. 1% increase. So if 1% is equivalent to 100 basis points, 1 basis point is equivalent to 0.01%. For example, if the yield of a muni bond changes from 4.00% to 4.01%, it's simply easier to say the yield increased by 1 basis point, instead of saying the yield increased by 0.01%. That's it.